Hey, Melissa. Yeah, Paramount's made a big step towards its long-term goal here of acquiring Warner Brothers Discovery with the decision of the Warner Brothers board, which we learned about just a short time ago, to determine that the new proposal from Paramount could reasonably be expected to lead to a superior proposal. It's a big step for Paramount, and it puts them in what I would argue is sort of the lead position at this point. In terms of, again, their goal of acquiring Warner Brothers Discovery. They've obviously been on the outs as Netflix has a deal and still has a deal to acquire the company for $27.75 in cash, that being the studio and streaming parts of the company, the remainder of which would be spun off, namely the cable networks under the Netflix deal. But that deal has to be in question now. My understanding, having spoken to people close to the situation, is that, Paramount has answered the questions around certainty that the Warner Brothers board has had throughout this process. And they have done that in a couple of different ways. But most importantly, they've raised their $5.8 billion reverse termination fee to $7 billion. So if, in fact, there was a regulatory determination that said the deal can't happen, $7 billion now would be going to Warner Brothers. But beyond that, and most importantly, the obligation that they now have to contribute additional equity funding to the extent needed, and I'm reading here from the release, to support the solvency certificate required by the lending banks to Paramount, that answers a key concern of the Warner Brothers board with the overall, what they called LBO structure here, meaning that if, in fact, Paramount's cable networks were to not perform well and they were to get close to close and say, you know what, we want to back away, or the banks were to say we want to back away, that is no longer a concern because of this willingness to contribute additional equity to make sure that, in fact, Paramount was solvent. Now, that seems unlikely, but that was a concern of the Warner Brothers board, as was the fact that Warner Brothers' own cable networks, if they, in fact, had significant declines, that Paramount could try and call a material adverse effect. That also is no longer a part of any merger agreement the two companies would sign. So in many ways, they've answered uncertainty. They're at $31 a share in terms of value with a ticking fee that goes up each quarter, starting with, let's call it October 1st of this year. And the pressure now, guys, is on Netflix to see what it's going to do, even though I should point out the matching rights period of 4 days has yet to begin. That only begins when it actually has been deemed a superior proposal. So what has to happen between now and then to get to that point? Very little is my understanding, but they do still have to have some more discussions around interim operating agreements and things of that nature before it is deemed superior and that 4-day matching rights sets in.